IT major Infosys ranked among the top 3 IT services brands in the world. TCS Q3 results. Net profits rise 11%. Announces dividend of Rs 75 per share. Indian IT sector sees highest growth in a decade. Adds 4.5 lakh new jobs. Indian IT sector growing at almost twice the rate of the economy. These are the headlines that have been making to the news recently. Whether it is Infosys, TCS or Wipro, Indian IT companies have been on a bull run since forever. India is now regarded as the center for IT. Today, India is the largest exporter of BPO and IT services worldwide. The IT sector's share of GDP in 1998 was only about 1.2%. 2 decades later, this number has risen to an impressive 8%. Given that it just survived a global pandemic. Even in terms of value to stakeholders, the total market capitalization of the IT industry stands at INR 29 trillion as on 20th January 2023. Regular dividends and even favorable buyback deals are common practices in the industry, which keeps the investors content. Yeah, we get that the IT sector possesses huge significance for the Indian economy. But isn't it only fair if we dig into it a little deeper? Welcome to Upsurge. Today, we'll be exploring the business model of IT companies like Infosys, TCS and Wipro in great detail and therefore solving the mystery of how exactly do they make money. After all, we at Upsurge have to ensure that you are always updated with something interesting regarding finance and stock markets. So let's get started. The rise of the IT sector in India can be attributed largely to a single decision, and that was the opening up of the economy in the early 1990s. We are all well aware of the circumstances of that period and also the subsequent liberalization and globalization. Those were the years when domestic companies were oriented with the vast potential that global markets hold, and parallelly, it induced the world to place a bet on this ever-growing economy and trust its resources. While the economy has been bearing the fruits of this decision for over 2 decades now, it was the IT sector that compelled leading economies like the US and Europe to move their technical base to India for all things digital. The size of the IT and ITES industry grew from $100 million in 1990 to $1 billion in 1996, changing the landscape of the services sector of the country forever. By 2000, this number had increased to $5 billion, equaling a 50 times increase in a single decade. However, like all growth stories, this too wasn't a one-night affair. It took over years of hardships for companies like Infosys to reach the stage where they are today. It was in the 1980s that India saw the first wave of IT entrepreneurship. Wipro Information Technology by Azim Premji and team, Infosys by Narayan Murthy and team, Mastek by Ashank Desai and team, and many more sowed their seeds in this period. With a wide array of talent ready in the country, government decisions of opening up the economy unlocked lucrative opportunities for software export services. So much so that in FY 2021, the export revenues from the IT industries were clocked at $150 billion. Some major reasons for the advantageous position that this industry holds today would be skilled manpower at economic rates, coupled with the young and dynamic workforce, low cost of operation and tax advantages, corroborative government policies, fast adoption of emerging technologies such as artificial intelligence, cloud computing, etc. So now, let's get to business, shall we? How and why is it that IT companies are almost always posting profits and are go-to choice for investors? How do they even make money? Let's find out. It's of course a no-brainer that these IT companies provide, well, IT services. All things digital are taken care of by these companies. Remember the concept of outsourcing that you did in school? Well, then you do have something on similar grounds. Say for a banking or food company, taking care of the IT aspect of their business might prove to be costly and time-consuming, simply because they don't have core expertise in it. So they let the experts do this work for them instead. And the experts are of course these IT firms. While the type of services offered range from digital experience, applied AI, blockchain development, to even cybersecurity, the operations can be divided into 2 main categories. 1. Application development. This involves making a software product from scratch that caters to the client's needs and requirements. This can be anything from a website to an internal software for company operations. For example, the newly launched income tax portal was developed by Infosys. Second, application maintenance. This is a form of vertical integration that adds to the revenues of IT companies. Developing an application is only half work done because it is an equally tough task to maintain it. Making sure that it runs smoothly and its seamless operation is also a service that IT firms provide. This is not an exhaustive list, as different companies have added different revenue streams to their portfolio. TCS, for instance, offers IT consultancy services to its clients. This involves merely suggesting to the client with regard to the digital aspect of their business. Companies have also developed software products that act as tailor-made solutions for specific IT problems of the client. For example, TCS has TCS Add for pharmaceutical and drug development, and TCS Banks, not banks, but TCS BA and CS for companies in financial services and many more. This makes their work easy and requires minimum effort on their part to suit the client's needs. However, having multiple revenue streams does not guarantee profits, does it? So what makes these IT companies different? The primary reason has to be, of course, being asset light. Their only investment is in the human capital and some extent of research and development. Nothing beyond that. So of course, they have huge amounts to reinvest in their business. Currency arbitrage. As we saw earlier, how India is an ideal location for Western firms to outsource their IT operations, so evidently majority of the revenue for Indian IT firms comes in a foreign currency, with there being a widening gap between INR USD and INR EUR leads to inflated profits for these firms. Billing process. The projects undertaken by these companies are either fixed price, meaning a pre-decided amount for the entire project, or time and material based, wherein resources are provided by the client and only hours put in by the IT professionals are billed. In both these scenarios, the risk of default is minimum, as the only investment by the firm is the time and expertise of its professionals. And not to forget, their clients are all Fortune 2000 companies that follow strict professionalism. All these factors indeed make the IT sector an investor's dream, and it has been quite evident from their performance in the Indian stock market too. The sector has maintained an average of 27.5x price to earnings ratio in the last 3 years, which if you see is not very expensive given the consistent performance the company has given. TCS remains the stalwart amidst the group. It is the second largest Indian company by market capitalization, with the number currently being INR 12 trillion. As compared to the industry average PE ratio, TCS has a slightly higher PE ratio of 30.3x. The annual earnings are expected to grow at a decent 10.7%. Unlike Infosys, TCS has also seen stable leadership over the previous years, which makes it a favorable choice. And mind you, this is just the beginning of it. The Indian IT industry is expected to grow to a size of $350 billion over the following years. Especially since the onset of the COVID-19 pandemic, the world has been more than ever relying on technology. Instead of dampening their growth, even better spectrums of growth have opened up for the IT industry. This, coupled with favorable macroeconomic conditions in the country, is certainly going to mark the era when Indian IT companies dominate the field. What are your views about the future of the Indian IT industry? Let us know in the comment section below. Also, if you found this video to be knowledgeable, then do hit the like button so that the YouTube algorithm works in our favor.